If you've been in crypto for long enough, you've seen the history before. An altcoin goes up 5, 10x, everyone calls it the next Ethereum, then the bear market hits and it never comes back. So today I want to answer one very important question. Why do most altcoins never recover? Because I know 99% of you that are watching, that are on YouTube, you are holding altcoins. Not dip, not drawdowns, they just never recover. And the three main reasons that make this happen is the dead coin phenomenon, inflation, unlock pressure, and narratives dying. If you're holding backs from the last cycle, maybe this video now will save you years of pain. Because what you learn will probably change your mind, the way you look at altcoins. So, and even if you look at the statistics, I found something very interesting. Over 50% of cryptocurrencies have failed, and this is the statistics of CoinGecko. As you can see, over 13.4 million coins projects have died since 2021, and that's more than 50% of all the projects that have ever been created. That's a very, very huge number. Half of them, basically, more than half even. With the most projects, as you can see, are in 2025. With every year, we have more and more projects that are fake, that are scams, so you have to be very careful what you invest into. As you can see, with every single year, the number of scams are becoming more and more. Let's see what's going to happen in 2026. I guarantee you that, especially in the time of bull run, this is where millions of projects get created. When it's a bear market, almost nobody's interested in crypto. Nobody's is even looking at charts, at coins, nothing. But when the bullish time comes, you would see millions of projects being created. So the first thing that we want to discuss is the dead coin phenomenon. What is a dead coin? A dead coin isn't necessarily delisted. It's not rugged, it still exists, but it has no users, no developers, no demand, no reason to hold it. Price might still move, but the soul of this project is gone. Dead coins don't crash to zero necessarily, they slowly bleed you to death. And one typical example here could be meme coins that you're holding from, let's say, 2024, around March or April, probably. Earlier in the year, we had meme coins performing pretty well, and probably a lot of you are holding some of these meme coins. They're not fully dead, but they are not they don't seem to be alive. There is no soul, there is no engagement, or the hype around meme coins that we usually see. So the dead coin actually traps investors because of psychology here. If the project already fell 90%, how much worse can it get? People think I'll just wait for the next altcoin season. It went to $10 before, it can go back. And just some simple maths here that will actually surprise you. If a project dropped 90%, or maybe not surprise you, but you maybe didn't even think about it. If a project drops 90%, it needs 10x just to break even. That's 900%. If it drops 99%, you need to make 100x to break even. Or 9,900% increase. How often do you see that is my question. Most coins never get that second chance. That's the first one. An example here is a project called EOS. If you've not been around at that time, it was top 5 at some point. Massive, the so-called initial coins offering narrative, ICO. Endless hype. What went wrong? It had no real adoption. Developer interest died eventually. The narrative moved on. And this project didn't die overnight. It slowly became just irrelevant. And you'll see that happening with a lot of projects. Another example is NEO, the Chinese Ethereum. In 2017, every influencer was hyping this project. Institutions were coming, big promises. Then we saw Ethereum improved, we had Solana, Avalanche, other chains emerged. This project, NEO, stopped being special. So crypto doesn't reward old hype. Some projects will never come back alive. So markets don't really care about your enterprise. They care about users, they care about liquidity, they care about relevance. That's why it's important not to marry your coins. If a coin has no reason to exist today, it won't recover tomorrow. Reason number 2. Inflation and unlock pressure. This is where most beginners get destroyed. What inflation really means in crypto. And no, it isn't CPI data. It is new tokens entering circulation, team unlocks, ventures unlocks, emissions, staking rewards. Even if the price stays flat, your share of the network is shrinking. And I'll explain to you what I mean. So imagine a project has 1 billion tokens total supply, and let's look at this project as an example. The circulating supply is, let's say, only 200 million. The price is $1. Now 800 million tokens unlock over 3 years. What happens? We see constant sell pressure. Rallies get sold into, and price struggles to move. So price is fighting gravity every single day. This is what is happening, and usually projects can't beat this gravity. If an altcoin, we very often see altcoins being backed by venture capitals, VCs. They don't think like retail investors. They buy extremely early at very cheap prices. They get massive discounts, and they are happy at selling the prices that we retail investors call a dip. When unlocks hit, we see more tokens coming into the circulating supply. The chart looks weak. Retail investors keep buying the so-called discount, but ventures, VCs, they keep distributing, and this is how bugs are passed. VCs get out of the game when retail investors think that it's just a dip and keep buying. That's what happens. That's the second reason. And you also have high APYs, staking traps. You would see some projects offering so much yearly returns. Coins promising 50%, 100%, 300% APYs. So how does that work? Where does the yield come from? Have you thought about it? New tokens printed out of thin air. This is what these tokens are offering. That's why they offer you high APY, because they have new tokens printed out of thin air. And price may go down faster than your rewards actually grow. So you're not earning yield. You are just being diluted. Sometimes you would even get your tokens locked, and they would have lost so much value at the end that your reward that you've earned is so small, and your tokens now are worth nothing. When you're choosing a project, ask one question: is demand growing faster than supply? If not, this means that tokens unlocks will win, inflation will win, the price will lose. This is why Bitcoin feels boring, but it survives. And number 3 is the narrative that is always dying. Crypto is a narrative driven market. Price follows attention. Attention follows stories. So when the story dies, so does the coin. And if you've been around, maybe last year you had an example of the Mad Fury meme coins. A lot of influencers were crazy about those. But that was only a month or two lasting narrative, and a lot of retail investors unfortunately lost money because the story died pretty quickly and it was only hype driven. We had the ISO platforms as well dying. The Ethereum killers first generation all died. The metaverse land please all died. I'm still holding my Mana, by the way, Decentraland. It's a gaming metaverse type of project. I'm still holding it, but it is dead now. Move to earn. I still have sweat application on my phone. When I'm walking, I'm gathering sweat tokens, which are worth nothing right now. So the move to earn also died. I'm still into those, but I don't think they would ever recover. Web3 social waves. Again, they are dead. So each cycle has its winners and, of course, massive graves. Everything has its own time. If you take metaverse tokens, for example, everyone needed virtual land. Companies were entering the metaverse. Tokens pumped violently. If you look at Decentraland, Mana, it went up to $5. The reality, it has no real users, no revenue, no retention. When hype left, liquidity also left, unfortunately. Move to earn, the sweat application that I have on my phone. The initial phase was so good, and I personally was so excited about it. Earn money walking. I was walking so much. Explosive growth. I saw that. But the problem is that we had Ponzi style token economics. Rewards were bigger than the real value, and this was no sustainable demand. Once new users stopped coming in, this model fully collapsed. So it didn't work out. A narrative never fully comes back once it's been milked, unfortunately. Crypto moves forward. Better narratives come alive. Capital rotates. Attention shifts. Old narratives don't pump, but new ones do. Even if you look right now, the privacy coins, they are skyrocketing. It's something new, something innovative. You've seen in the past AI, you've seen meme coins, and you'll see so many new narratives coming in 2026. So before you decide to buy any project, ask yourself, is the narrative still growing or fading? Is the token supply still inflating? Is the circulating supply very small which will create inflation. Are unlocks ahead or behind us? If they're ahead, this will create selling pressure. If they're behind us, that's a good sign. Are users increasing or just the price? Would I buy this today if I had no position? If the answer is no, sell the hope. Keep the capital. So just try to avoid the coins that never recover. Like, subscribe, and share, and I'll see you in the next video. Thank you for watching.